Welcome back to Your Average Investor. Today I'm going to show you a really interesting example of selling covered calls on a position over the long term and how you can use it to mitigate downside risk and even potentially earn yourself some free shares. Yes, I know that sounds a little bit crazy, but we're going to see how it can get you to have some free shares, and we're going to use Tesla as an example. This is a completely manufactured example. As you can see, I'm using on demand. This is simulated. And I've set my date back to May 8th, 2023. I want it to be a 1-year experiment. So hang with me, buckle up, this is going to get fun. What we're going to do is we're going to start by buying as many lots of 100 of Tesla as we can. So I'm going to buy, I think 400, no, I can do even more than that. Let's go 600 shares, brings me just over, so we'll go 500 shares of Tesla. We just bought 500 shares of Tesla. It used almost all of our purchasing power to buy those 500 shares. We got it at $171 per share. Now, the first thing that I'm going to do as a covered call investor is I'm going to think about selling some covered calls right here at $71 a share. Actually, that's not 100% accurate. What I'm going to do is I'm going to wait to see if Tesla moves up. And if it moves up to maybe this like 190 to 200 range, then I'm going to do that. So let's just fast forward a couple weeks. We're going to fast forward to May 22nd and see where Tesla's at that point. Check this out. We've got a nice bump up to $185 a share, and then it comes back down. We're at like 183 right now. So I'm going to think, you know what? I've had some nice appreciation on this position. I bought it at 171. Once this finishes buffering here, it will update. And now I'm at 183, so I'm up about $12 per share over 500 shares. That's fantastic. A $6,000 profit, but I want to make that even bigger. So what I'm going to do now is I'm going to look at these weekly contracts that are just 4 days to expiration, right? And I'm going to sell, let's just do a call 190. So I want to sell a call 190, and I'm going to sell 5 of them, 2, 3, 4, 5, because I have 500 shares, remember, so I can sell 5 covered calls. I'm going to get $150 per lot, which is a total of $780. I'll send that in. Now, here's what's important at this point. It's not necessarily that I've made $150. It's that I've reduced my cost basis per share by $1.50, a little more than that, $1.50 and 57 cents. So I'm going to bring up a calculator now. What I'm going to do is I'm going to type in my beginning price, 171.09, and I'm going to subtract out of that this right here, 1.57. So now my cost average is truly $169.52, meaning if by Friday, by this expiration, if Tesla dumped and was trading at $169.52, instead of losing money, I'd be break even because I sold these call contracts. So let's move this to the side real quick. And we're going to fast forward to Friday, see what happens. So we're moving from the 22nd to the 26th. We're going to fast forward in time. Oh my gosh, look at that. Is this a disaster? I don't know, because now Tesla's trading at $190 a share. And isn't that what we just sold? It's actually above 190 a share. We sold call 190s. So are we in trouble? Not really, because we can just roll the position. So here's what's interesting. Take a look at this. We sold at 157. It's currently, even though it's in the money, it's only worth 140. So we're technically up on that. We're up $9,000 here. We're up $70 there. I don't want this position to get exercised. So here's what I'm going to do. I'm going to go back to the trade, and I'm going to open up this next calendar week here. So this is 7 days out. I'm going to buy this position back for 1.43. At the same time, I want to sell this position here. Let's go the 200s just to be safe. So I'm going to sell the call 200 for a week later, right? So this is going to net me an extra $38 per contract. I'm doing 5 contracts. Let's send that in and see if it gets filled. With on demand, sometimes the fills are a little bit finicky, so let's just let's pull this down to like 35, see if we can get filled there. And if I'm not getting filled, maybe what we'll do is we'll just try a different one. So let's buy this one back. Oh, look at that. That moved up to 180. Look at that. That's very interesting. So maybe at this point, and I'm doing this, I'm just spitballing this live. I haven't planned all this out in advance. So this moved up now to 190.69. So let's say, oh, maybe I think this is going to come back down let's just fast forward like, I don't know, 20 minutes or something like that and see if the price comes back down a little bit. Kind of, but not really, but it did come down a little bit. So, you know what the heck. We'll just continue on with the trade. So we're going to go back. We're going to buy these ones back. And once this updates, it'll probably be back down to like 150 or 140 or something like that. And what we want to do is sell 7 days out. There it is, back to 150. So we're going to sell 7 days out. We'll just move to the call 195, see if we can get a fill there. Sell all 5 of those. And there we go. We filled for 1.6. So what I'm going to do now is I'm going to subtract another 1.6. And now my cost basis is 167.92, meaning if by the following Friday, Tesla is trading at $167.92 per share, instead of losing money, again, I'm at break even. So let's just fast forward. We're on the 26th. We're going to fast forward to, let's see, is it April? Let me make sure I'm on the right date that I sold. So we want to, we're in May, June. So we're going to fast forward to June 2nd. April, May, June. So we're going to fast forward to June 2nd now. And we're going to see what the heck happened to our position. And check this out, guys. This is really fun. This is a great example. So, oh my gosh, I'm caught in a position. Look at this. Here's Tesla. You know, I bought back here at like 170, whatever. And it's just kept on going up and up and up. And now I'm stuck in this position. And that's a really weird candle. I think we have a glitch going on there. Anyway, yeah. So now we're at $210 a share, and oh my gosh, guys, look at this. I sold this for $300. Now it's worth $1,700, almost $1,800. What am I ever going to do? Well, what I'm going to do is I'm going to roll. So I'm going to buy this one back right here. And what I'm going to do is I'm going to look to roll, and I'll have to roll further than 7 days at a time now. Let's look 30 days out. So I'm going to roll 30 days out. This is worth $1,800. And would you look at this? I could also sell this 205 for about the same price. So I'm going to do that. I'm going to sell this 205. I'm going to do 5 of these. And hopefully I get a little bit of a credit here. But this is the important thing, is I'm moving my strike up from 195 to 205, right? So let's see if we get filled. Boom, look at that. Filled for 77 bucks. So we're going to do minus 0.77. Now my true cost is 167.15. Remember, I started at 171. Now I'm down to 167.15. And we're just going to fast forward the clock again. So I'm going to take, what's this? This is July 7th. So we're going to fast forward. We're going to go June. We want to go July. Let's go to the beginning of the week. Go to the beginning of the week and see what it's looking like. Oh my gosh, guys. This is nuts. Look at that. We're stuck, right? The price just keeps going up. It doesn't stop. We were at $200. Now we're almost at $300 a share. What the heck are we ever going to do? We're going to roll. So as soon as this finishes buffering, there we go. Look at this. We sold this for $1,800. It's now worth $7,700. Wow. Well, in this case, I'm stuck a little bit, I think, right? No, wrong. I'm going to go back here to trade. We're going to have to open up all strikes so I can find this one. We're going to buy this one back for $7,700. And I'm going to have to push pretty dang far out. Let's go like 4 months out into November. And we're going to find something closer to the money. Okay, so here's the important thing, right? So we always want to be gaining premium. So I sold this at 77. Or I'm buying this back, excuse me, at 77. So we're going to find something here around 77. Look at this. Here we go. We've got call 215s for 80 bucks. So I'm going to get a credit here of $350, and I'm moving my strike up another 10 bucks. Now here's something that's an important caveat. When you sell covered calls, at any time the person who owns the call, there we go, hang on, we filled for 3.52, so let me just real quick, minus 3.52. So at any time the person on the other side, which in this case is the market maker, can choose to exercise that position, right? So I've just sold them a call 215, which means if they choose so, I could wake up tomorrow, and even though there's 137 days left till expiration, they could choose to exercise that position and call away my shares at 215 per share, and I would be forced to sell. And while that can happen, it's usually not likely. It does happen sometimes, but it's not likely. And the reason why is there's a lot of time left on this contract, and a lot of that value that you're seeing, that $8,000, is because of the time that's left on the contract. So it may not be worth it for them to exercise that contract early. Maybe sometimes they'll exercise it a few days early, but not usually 3-4 months out. But again, that is a risk you're taking in this strategy. So let's just fast forward, right? We sold this for November. So let's just move into November. What was this, 23rd? Let's just go to the 1st of November, see what Tesla's looking like at the 1st of November. And would you look at that, guys? Oh my gosh. Tesla was up here and just bouncing around in this range, and now they're all the way back down to $200 a share. And you know what's so great about that, right? We'll wait until this totally finishes buffering, but the beautiful thing about that is this contract that we sold, 215, is now an out-of-the-money contract. And when you check that out, wonderful, wonderful to see. This is great. We're still up $15,000 on our Tesla position, but our total account is up $17,000. We've literally gained $2,000 just from selling premium and rolling. And we got stuck in kind of an unfortunate situation. A lot of times, I mean, this type of a rally wouldn't necessarily be what you're expecting, but you know, it happened, and that's okay. But then look at that. And in fact, we could have maybe switched up here too. Look at Tesla bounced down to 215, come back to 270. Now we're back down to 200. So in this case, what are we going to do? We're going to let the contract expire worthless, hopefully. So let's just fast forward to the date of the contract, which is November 17th. So we're going to fast forward to this Friday and see what's going on. In this case, November 17th rolls around, and look at that. Would you know it? Tesla is now trading at $230 a share, but remember, a big part of the value of these contracts is the time till expiration, and this is the date of expiration for this contract. So now look at this. This contract's worth $1,600. I sold it for $8,000. That's not exactly true because I had to roll it, so I only made like $350 when I rolled, but it's only going for $1,600 now. So look at what I can do. Let's just do this. I'm going to change this back down to 14. So here's my position here. I'm going to buy this back. I'm going to look about 30 days out to sell another position. So this was $1,600 for a 215. Look at this. I can sell a 220 for $2,000. So in this case, I'm going to get $450, and I'm moving my strike price up. Let's make sure I'm selling 5 of those because I have 5 lots. And look at that, we got filled for 4.39. So here we go. I'm going to subtract now 4.39 from my position. And now I'm at $159 per share, right? So if Tesla drops to $159 per share, I'm good. I'm break even. And we're going to fast forward now to December, what was that? December 22nd. December 22nd. We'll go actually the beginning of that week. Sometimes it's nice. If for example, Tesla drops down to like $180, then this contract's not going to be worth a lot. So sometimes it's worth buying it back and then selling another one that's closer to the money again. We'll just see what happened. Oh, look at this. Tesla moved up again. Now we're sitting at what, 258 per share? So we're going to fast forward a few more days. We're going to go all the way to the date of expiration. See, maybe it drops back down to 220. Maybe not. All right, still at 250. So what does that mean? That means we sold this at $2,000. It's going to be worth about $3,300 because that's how much above the strike price it is on the day of expiration. And all we're going to do is we're going to roll. So I'm going to buy this one back. We'll wait till this data buffers. A few more seconds here and it should be buffered. There we go. Look at that, $3,600. I'm going to buy this one back, and then I'm going to look for about 30 days out. We'll see if we can, again, we want to move the strike up. So this is going to cost $3,600. And I can't move the strike up for and gain premium at the same time, right? So if I did this, I get $17, not really worth it. So what I'm going to do instead is I'm going to buy myself a little more time. So I'm going to buy this one back, and instead of looking 30 days out, let's just go into like February. Let's go February 24th. It's almost 2 months out. And look at this. Now I can sell a call 230 or call 225, and either one is going to make me more. So let's just go with the 225. So here we go. I'm getting another 382, and I'm gaining another $5 in strike price, right? So let's get this filled first. Oops, that's too many. There's 5. Okay, we filled at 382, so now I'm going to subtract 3.82, and now my cost average is 155.42. All right, let's fast forward. We're going to fast forward to February, about February 16th. So let's go to the 12th. We'll go to the beginning of the month. And would you look at that, Tesla is now trading at $192 a share, which is great. It's still well above where we bought at. Once this updates, all these numbers will update. But it's still well above where we bought at 171. And these contracts are likely going to expire worthless now. So we'll just, there we go, we're buffered. We're up 10 grand on this position here. But you notice up here, we're up $18,000. So we've almost doubled our profit just by selling covered calls. These are basically worthless now. $8-9 a share. Nobody's thinking Tesla's gonna come back and rally that hard. So let's open this up and buy these ones back right here. And we're just gonna sell some more about 30 days out. We'll go March, and we're gonna sell. Let's go with these call 200s. So what this is gonna do again, because we're buying these ones back, even though they're only worth a few pennies, it's gonna slightly reduce how much we get here. So it looks like we're getting about $684. We'll send that through. And this one might be one I have to fill in 2 orders because of how on-demand works. Let me do this. We're going to first start just by filling this one solo, and we'll just keep track of it on our own. So let's go here. I'm going to buy these 1, 2, 3, 4, 5. And that filled for $9. And then we're going to go back out here, and we're going to sell these, did I say 200 or 205? I don't remember what I said. We'll sell these at 720. So that's filled 725 minus 9. We're going to minus 10, so 715. So now I'm going to come here and I'm going to minus 7.15. And now my cost basis is 148.27. Really nice. If Tesla drops to 148, I'm break even. So let's fast forward now. We got to go to March 15th. We'll go again to the 11th, the beginning of the week, see how it looks. And would you look at that, Tesla's down to $179 per share. We bought at 171. We're basically back to where we started on our shares. We're a little bit profitable. We've made 5% on the shares, 4 grand. But look at this. We've made $10,000 in premiums. And so, again, these contracts are basically worthless now, $30. So I'm just going to buy those back. And then we're going to look to sell another 30 days out into about mid-April. And we're going to continue to just collect this premium. So let's sell these call 190s, 1, 2, 3, 4, 5. This should give us about $650. There it is, 6.5. So let's go here. I'm going to minus 6.5. And that brings us to 141.77. Let's fast forward now to April. We sold for the 12th, so let's go to April 8th. And look at where Tesla is at on April 8th. And would you look at that, April 8th rolls around and the price of Tesla is basically where we bought it at. We bought it at 171.09. It's currently at 172.2. So it's up like $1 per share from where we bought it at. Basically nothing. But again, this premium that we've been collecting has made it so our true cost basis is 141.77. So that's why you see here, even though the position's only up $500, $600, our total account size has grown by $15,000. Pretty dang incredible how covered calls can help a position. And I know I talked about how we can get free Tesla shares. Well, we're coming up on about a year, so let's just do this one more time. We're going to buy these back, and then we're going to sell one more month out, and we're going to sell these May 10th contracts at, let's just do 185. So we're going to do that again, 1, 2, 3, 4, 5. We're going to get about a $600 credit there, 662. So we're going to come here, minus 6.62. Now our cost basis is 135, and we're going to fast forward as far in time as we can, which is May 7th. Otherwise, it's basically today, May 9th. And look at this. Tesla is now trading at $178 a share. We've managed to survive through this big downturn all the way down to like what it was the low here, $138 a share. And now this contract is just about to expire worthless. Let's just pretend I'm like, you know what? Tesla might rally right now, so I want to buy that contract back before the end of the week. I think it expires in 3 days. You could just buy that back for 1.25 or something like that. Wait till Tesla moves up and start selling contracts, and you do whatever you want. But look at this. This is the cool thing. We've just reduced our cost per share all the way down to $135 per share. The other way to think about this is at this point, let's say I'm like, you know what? I'm kind of sketched out about Tesla right now. Maybe I don't like what Elon Musk is doing on Twitter. Maybe I don't like other things about Tesla. Maybe they haven't delivered on full self-driving like I thought they would. Whatever the reason is. Watch this. Watch what I can do here. I'm going to buy 5 of these back, right? 1, 2, 3, 4, 5. So now I've just cleared that position. I'm going to add 1.22 to this. So we're going to go plus 1.22. So now my cost basis is $136.37 per share. Well, another way to look at this is how much money have I gained, right? My total position here is up about $3,000, but I'm up $21,000 here. So let's do it this way, right? Let's go $21,000 minus, we'll go minus $4,000. So I've made $17,000 in premium. So 17,000, we're going to divide that by 100, we'll go by 180 because that's a little bit under what Tesla is trading at. So that brings me to 94 shares. That means what I could do right now, remember I bought 500 shares. I'm going to go ahead and sell 400 shares right now. Check that out. I've got 100 shares of Tesla at that are currently trading at $179 per share. And I've got $121,000 here. So let me do this for you. We're going to pretend these 100 shares that are currently worth 178, what is it, 107, we'll go 179 times 100. So these shares are currently worth almost $18,000. If Tesla went to 0, what's going to happen to my stock account? Well, we're going to take 17,900, we're going to take 121,260 minus 17,900. That leaves me with $103,000. Would you look at that? I've just earned myself 100 shares of Tesla completely free. And I did it by trading covered calls for 1 year on Tesla. Now, of course, in order to have done this, you'd have needed $100,000 in the first place to buy enough shares so that you could sell 5 covered calls each time you were selling. And you'd have needed to get, I don't know, somewhat lucky, I guess, with not getting stuck and having the contracts called away. But you could see how this could work for a number of different positions. Like let's go with something a little bit smaller here, right? Let's look at SOFI. And we're going to gamify this one too. Let's go back 1 year on SOFI. I know SOFI basically trades in the range of like $7 a share. So we're going to go back 1 year to May 1st. And let me reset this. We're going to reset all of that. Otherwise, that'll get goofy. So we're going to go back to May 1st, 2023. And look at this. SOFI just had earnings and they dipped. I'm like, ooh, I like SOFI. This is a nice earnings dip. I'm going to buy in right now because, you know what, I like the company long term. Whatever. Doesn't matter why you're buying in. You're just buying in. And let's say, again, because you don't have the $100,000 it would take to buy 500 shares of Tesla, maybe, though, you've got $3,500 that you can drop on SOFI. So we're going to go buy 500 shares. That's going to cost, not even $3,500 because it's at $6 a share here. It's going to cost me $3,000 to buy 500 shares of SOFI. So boom, just bought 500 shares of SOFI. And let's say I'm like, you know what? I think they're going to recover. They're going to bounce back off of this. So I don't want to sell any covered calls yet. I want to wait, I don't know, maybe a month or two and just see what happens. So we're going to fast forward a couple months. I don't know. I do know SOFI goes up at some point. I don't know when it happens. So we're just going to choose a random time here. Oh, this is great. So now SOFI, look at this. SOFI moved up. Here's the earnings. Then boom, they moved up to 10. Now they're bouncing around. I see them kind of bouncing and struggling. So I'm like, you know what? At this point, I want to start protecting myself against the fact that SOFI could move down and start trading at like $5 a share again. So what I'm going to do is I'm going to go here to my options tab again. And I'm going to look at these option chains about a month out. 28 to 35 days is generally what I like. That's what this number right here represents, is days to expiration, if that wasn't clear. So 0 days, 7, 14, 21, 28, 35. And I'm like, all right, I've got 500 shares here. I can sell 5 lots. I'm going to go right here. I'm going to sell these call 10s because SOFI's been struggling to break the 10 range. So I'm going to sell these and I'm going to get $59 a pop for them. So $59. Again, let's bring the calculator back up. What was our average? 5.75 minus 0.59. We've just decreased our cost basis down to 5.18. Now let's fast forward to August 18th or thereabouts. So we're going to go August 14th, look at it at the beginning of the week, and then we'll see what happens, right? Boom, look at that. SOFI's trading at $8.50 a share. these contracts are going to be probably worth $5-7, something like that would be my guess, maybe even less. And we'll wait till this updates, and then it will tell us what the contracts were worth on that day. There we go, $2 $2 a pop. So I'm just gonna buy these back, right? We're gonna go 1, 2, 3, 4, 5, buying those ones back, and at the same time, I'll have to do it here. All right, so we're buying these 5 back. At the same time, we're gonna look at going another 32 days out, and this time I'm gonna sell these call 9s because it looks like the price is dropping, right? So I'm lowering my strike price, but that way I get a nice amount of premium. I'm gonna get a credit of about $41 if this fills, and it's gonna get funky with me, so we're gonna fill these one at a time. So we'll go 1, 2, 3, 4, 5. Buy these 5 back here. That cost me $3. And now here we go on this one. These call 9s, 1, 2, 3, 4, 5. That's going to give me, what, 43 bucks. So a net of $40, right? So now I'm going to go minus 0.4. Now I'm at $4.78 a share. Here we go again. Let's go back to the charts. We're going to fast forward. What was this that I sold? It was a September 15th. So we're going to fast forward now to the beginning of the week of September 15th. Going to take a look at the charts. Look at that. SOFI basically hasn't moved in a whole month. It's just kind of flat the whole time. So maybe it's gone up like 20 cents. I don't remember exactly where it was at, or 5 cents or something. But it's basically been flat the whole time. What that means is these contracts are going to be basically worthless now. Sold them for 44 bucks. Look at that. They're worth $10 now. Maybe I don't want to buy it back yet because it's 10 bucks. So let's just fast forward to the 15th. We're going to go to the day of expiration. Oh my gosh, look at that. $9.12 now. Well, that's okay because I sold a call 9 that expires today. So the most that is going to be worth is like 12 cents, 15 cents per share. 12 or 15 bucks. And I sold it for 43 bucks. There it is. 14 bucks. So we're going to go ahead and buy this one back. We're going to look 30 days out again in October. And we're going to sell the call 9 again. We're going to just say, you know what, I want to do the call 9. So look at this. This is going to get me a net credit of $51 per contract. If that fills, we're going to have to do it one leg at a time. So here we go again. We're going to buy these ones back. 1, 2, 3, 4, 5. There it is. 0.14 is what we got filled at. And then we're going to sell these. 1, 2, 3, 4, 5. And those got filled at 0.65. So we made $51 per contract. So minus 0.51. Check that out. My cost basis is now $4.27. Well, let's fast forward. Let's see what happens. We sold the October 20th. So we're going to bump forward into October. We'll go to the beginning of the week again, and we're just going to see what happens. And look at that. SOFI is trading at $8.29 a share. It's moved down a little bit. It hasn't, you can look at the chart here. In the last month, it just bumped around, and there we go, $8.20 a share. These are going to be worth like $5, maybe $7 at most. Look at that, $3, $4. So I'm going to buy those back now. We're going to buy them back. 1, 2, 3. Oops, wrong way. 1, 2, 3, 4, 5. Buying those back. They got filled at $4 each. And we're just going to do the same thing. We're going to look 30 days out. So in this case, 30 days out puts us in mid-November. We're going to sell the call 9s again. 1, 2, 3, 4, 5. There it is. We got filled at 49. What did that cost us before? It cost us like $4. So we just made $45 more. So we're going to come back to our calculator now, and we're going to subtract out 0.45. Look at that. Our cost basis now is $3.82 a share. Beautiful. And let's just fast forward. We're going to go fast forward here to November 13th. And look at that. SOFI is now dropped down to $6.90 per share. These are going to be worth a penny. It's going to be worth a penny. And I've just massively mitigated my downside, right? Even though I'm up overall on my position still, right? Because I bought at 5.57, it's still 6.9, so I'm up like $1.20 per share, over 500 shares. But on top of that, I just capitalized over the fact that I knew, or I had a hypothesis, and again, this is a manufactured hypothesis because I knew in advance, but that SOFI had been struggling at this $9 to $10 a share range, so I figured it'd probably be moving back down soon. And look at this, that's worth a penny now. Buy those back. 1, 2, 3, 4, 5. And let's say I'm going to sell covered calls again, and I'm going to do it 35 days out. We'll go 39 days out. a little bit more. And look at this. Oh man, those $9 calls, they're worth like nothing now. $7, that doesn't make sense. Do I go 8? Do I go 7.5? Right? Who knows what you do at this point? So this point is totally up to you, right? You can decide, you know what, I made a lot of premium and it's back down at a range I don't really feel comfortable selling because I don't want to get called away at 7.5 or 8. Well, you know what? Let's just, for the heck of it, let's just do these call 8s because it's still pretty far out of the money. It's only 39 days. So we're going to sell 5 of these and it's going to get us some premium at least. So there we go. I just sold. We got 0.2 for it. But remember, we bought those back for $1 each. So we're going to do minus 0.19. So there we are now at 3.63. And we're going to fast forward to December. We'll go the first of that week, December 18th. And we're going to see what happens. Oh my gosh. Look at that. SOFI just jumped again. $9.4 a share. What are we going to do? Are we going to get called away? We sold the call 8s. That's buried $1.50 in the money. Just like with the Tesla position, we are in no trouble whatsoever. All we're going to do once this buffers and shows us, this will probably be like 170 or something like that. 140. Okay, so 140. All we're going to do, just like before, we're going to buy this one back. We're going to look about 30 days out, and we're going to sell, trying to gain premium and increase our strike price. So here we are on a call 8. It's going to cost us 145. Look at that. If we did a call 8 again, we'd get 169. So we could do that just to give us time, but we want to ideally push the strike up. So we've got to go more than 30 days. We're going to go to February. This is bring us 60 days out. And there we go. Look at that. I can do a call 9. And in this case, I do it basically for break even. So all I'm doing, I'm not gaining any more premium, but I'm moving my strike from an 8 to a 9. Or if I want to, I can say, you know what? Let's just keep it at the 8. Let's just keep it at the 8. I'm going to take another $60 in premium, and that will protect me against more downside. Whoops, let me move this to 5. So let's see if that will fill for us. Okay, we got $60 there. We're still in the call 8, but we're going to go minus 0.6. Now we're at 303. Okay, let's move this forward. We're going to go all the way into, we'll just go to the beginning of February, even though that was a mid-February contract, I think. I think it was, yeah, February 16th. So look at this. SOFI is now moved back down to $7.7, right? And again, this could have been like in this position rather than selling. You could have been like, yeah, I think SOFI will pop back up to 9, and then once it comes up to 9 or 10, then I'll sell some contracts again, and I'll stop selling down here and wait till these pops happen and then sell. That's a great way to do it. Is just when you see the prices down here at the supports, don't be selling contracts. Wait till it moves up and then sell your contracts. That way you don't have to get stuck in any positions you don't like. But in this case, it's all worked out for us. Okay, this is great. SOFI's moved back down. There's still some time till expiration here, so let's just fast forward to the beginning of that week, right? This is February 16th expiration, so we're going to go to February 12th, and we're going to look again. Oh my gosh, 8.43. We're stuck in the money again, except for you all know we're not. We're going to fast forward all the way to the 16th, see if it happens to drop down, and if not, we're just going to roll. It didn't drop down, 4.47, so this will be at like $40 when it updates, and all we're going to do is roll the position. Super easy. So we're going to end up buying these ones back. We're going to look 30 days out, 35 days out. Okay, so we're buying these back for $48, and look at this. I can now sell 35 days out, 8.5 for $61. That's beautiful. I'm now increasing my strike, and I'm getting a credit of $16 per share for that. Oops, I just did 1. I've got to do that again 4 times. So we're buying this one back, and we are selling this one 4 more times. There we go. That's what we want. So we made $16 per leg on that, so we're going to minus 0.16. Cost basis is 2.87. And we're going to fast forward to March, the beginning of that week, March 18th. And would you look at that? SOFI is now trading back at $6.96 per share. So at this point, maybe I just decide I don't want to be messing around anymore because it's gonna, it's sitting at this base, and historically it bounces off of this base and moves up. And so if it moves up to the $8 range, $9 range, I'll sell again. And we'll just pretend that's what happened. We're gonna let this contract expire worthless. And look at this. We've made $600 in appreciation here. Our total account is up over $2,000. We've made $1,500 just in premium. And we've reduced our cost in half, right? We bought these for $5.75, and we've now got a true cost of 287. So if I take this times that by 2, look at that. We've literally dropped our cost in half. So let's just say, you know what, I'm going to buy these back. Really, I would have just let them expire worthless, but I'll just buy them back just for the heck of it. So I bought those back for $1 a pop, and now I can say, you know what, I'm going to sell 250 shares of SOFI. And guess what? Now, if the rest of these shares go to zero, I'm break even. I've got 250 shares, about $7 a share. They go to zero. I'm break even because I've collected that. These are free shares of SOFI that I no longer have to worry about. Thanks for watching, guys. I know this was a longer video. If you enjoyed it, please subscribe and let me know how this goes for you. Selling covered calls has been a game changer for my personal investment portfolio in terms of giving myself some monthly income and reducing my downside risk on more risky stocks that I love. Love to hear how it's gone for you. Let me know if you have any questions. We'll catch you next time.